How to handle core positions post an RTA. So this one comes from the arena. And, the comment was kind of, hey, listen, Keith's been closing RTA shorts yesterday and today as soon as they turn green or near break even. He removed the QQQ RTA position first thing today. Kind of why, or he's covering some, right? And then it was a comment around kind of SQQ within the re-rank and how it moves up and down and that kind of thing. So I'll let you read it a little bit more, but so again, you're going to hear kind of inventory from me today. You're going to hear about focusing on your process. You're going to hear a lot of commentary the last week or two about just sort of trying to better understand your process and what works for you, what works with your portfolio. RTAs are Keith's way of communicating to us the pieces of inventory worth executing on within the framework of the signal, the quad, and the risk range. So it's pretty simple, right? RTAs are really a snapshot of time where, he sees something at the top or bottom end of the risk range. It's got a good signal strength behind it in either a negative or positive way, aka bearish or bullish trend. And then it's sort of, it fits the quad environment that we're in, and whether it's an individual security or an ETF, right? So these are that's the RTA. And then, as I mentioned a few minutes ago, they've morphed into coaching notes where he can communicate kind of, intraday, intramorning, intra-afternoon, whatever, intraday kind of commentary and pieces of nuggets of information that he wants to convey to all of us. It's really that simple, right? So let's not kind of dive too deep into RTAs, whether somebody commented earlier, if you don't think it's about getting the small win, you're crazy. I mean, I'd beg to differ. It's not about that. It's about what's the better way of risk managing your portfolio within the bloody chop bucket. The risk range today is 18.25 to 24.25. I'm rounding it off. Forgive me, but that's the low end of the chop bucket. It's not like we're sitting at 25 to 30, right? That's the low end of the chop bucket. Where the low end of that risk range on the VIX at 18.25 is below the 19 level, which means it's at the top end of the investable bucket. How hard is this to understand? He went fucking huge on shorts last week. He had what, 30, 28? He's covering some. You should be covering some because you should have you're likely having either a very wide breadth of short positions on, or you're at your max at a very select few. So why not give yourself some freedom to cover some, whether at a loss or whatever? Forget about your cost basis, right? Just cover some, bring the position down, risk manage the portfolio so that on a day like today where things are green, you're not just staring at it being like, oh shit, I wish I covered some yesterday so I could reshort here. It's again, so I'm not trying to yell at anyone. I'm just saying it's important. This is all about risk managing the portfolio. And if you don't want to risk manage it that way, then don't. It's your process. Build your process. Figure it out. And again, I'm here to help. I'm here to help. That's why I have these sessions every day. That's why I host a weekly notebook review. Not every day, excuse me. That's why I have a beginner's guide on Fridays. I'm listening to your questions all week long, right? I'm trying to help, and I love helping. But also you got to put in, you got to kind of understand that the process is the process, right? And if you're kind of new and you're not used to Keith covering shorts, then you got to understand it's his process. If his process doesn't work for you, then take pieces that do, right? Mold it into something that you can build upon, that fits your risk profile, that fits your time horizon, fits your willingness, or the time frame that you want to measure your success or failures, right? So whether that's a day, a week, a month, a quarter, a year, 3 years, 10 years, whatever that might be, position it so that it works for you. So again, we got a couple other things. I kind of got off script here, but so sorry about that. The other thing too is on SQQ. So just to tackle that, because I've seen a lot of commentary on SQQ and VXX, those things are bloody squirrels, right? And I asked Keith, I want to say within my first month or so, certainly is what my first 6 weeks, and I asked them, why didn't you provide, why didn't you add SQQ or give, provide the your position as to like how much you added, and he just basically said it's a squirrel, right? I'm not adding that, and so listen, you can see how it moves up. What the other, many of the other positions in terms of like what those sizes are from a mid max. I understand that you're not getting the actual position size itself, right? So I get that, but you can kind of see it moving up when it had been hovering down at the bottom of his re-rank SQQ, that is. When it started shifting up and then moved into the kind of the middle and the top half, then you should know that he's taking that up because he sees opportunity in the market in terms of being short QQQ. And that's also his long only account, right? So that's just one thing in terms of the Macro Pro re-rank product. In terms of covering some too, there's a component here as well where he's got options on, and in order to cover that from it's not from an ethical standpoint, if he's going to cover something, he wants to make sure that he sends you a cover signal inside of the RTA. So yeah, we do things in a very ethical, transparent way, and that's the right way to do it. So just a couple things there, right, to review on the RTAs.